Assalamualaikum warahmatullahi wabarakatuh. Now, I will introduce for the first company for our assignment is Zigzag Motion Berhad. The company was established on 30 December 2023. Zigzag Motion Berhad nature of business was providing replacement parts for a wide range of devices, including phone, tablet, and iPad. The company also had expert staff that could diagnose the customer's device problem and solve them in a short period. This company also offers a variety of SIM cards and provide repair service. The company has a property plant equipment according to FFR 116, which is plant machinery, warehouse and buildings, and also has the investment property according to MFRS 140, which is car rental and warehouse rental. Next is the initial measurement for property plant equipment. First of all, the company purchased plant machinery on 1st January 2024 amounting to 200 ringgit. The useful life is 10 years and it used cash method for the initial measurement. Next, we move to the buildings. It purchased on 1 January 2024 amounting to 7 million ringgit and it paid in 3-time installment. The useful life is 10 years and it used deferred payment method for the initial measurement. Last but not least, it is warehouse, which purchased on 1 January 2024 amounting to RM 9 million and the useful life is 30 years and it used self-contracted method for the initial measurement. This is the initial cost for plant machinery, which is 223,000 ringgit, and the building initial cost is 6,680,000 ringgit, and for the warehouse 10,200,000 ringgit. Next, we move to the calculation for initial cost and measurement for investment property according to MFRS 140. For first car rental, it used cost model, which the amount is 270,000 ringgit. And next is warehouse rental, which is 15% of the capacity used for rental income, and it used fair value model, which is the initial cost is 9 million ringgit. Next, we move to subsequent measurement for property plant equipment. First of all, the first subsequent measurement is plant machinery, which initial cost is RM 223,000 ringgit. The useful life is 10 years and it used cost model. Next is warehouse. The initial cost is 10,200,000 ringgit. The useful life is 30 years and it used revaluation model for its subsequent. This is the warehouse calculation for subsequent, which is it have revaluation budget 700,000 ringgit in 2024. And 2025, the revaluation surplus 4,200,000 ringgit and revaluation surplus 2,800,000 ringgit in 2027, 2,750,000 ringgit. The revaluation deficit on 2029, revaluation surplus 4,075,000 ringgit at 2031, and the fair value at 2033 is 40,225,000 ringgit. Next is the calculation for plant machinery. The initial cost is 233,000 and it has accumulated depreciation for 10 years, and it has replacement cost for old component and new component, and it has impairment loss, which is we use recoverable amount, which we compare value in use and net realizable value, whichever is higher. And this is the calculation, and the amount for the carry value at the 2023 is 0 after we less all the accumulated depreciation for 10 years.
Hi and Assalamualaikum. My name is Abdul Azim bin Abdul Muttalib and I will present about subsequent measurement for IP and transfer IP to PPE. For the first item is car rental. Car rental are purchased on 1st January 2024 amounting 300,000 and useful life is 10 years. It used cost model as subsequent measurement and the rental income is 200,000 per annum. However, in January 1st, 2009, the car rental was used for administration purpose, so the company used a cost model to account for its investment property and revaluation model for its PPE. The second one is warehouse. Warehouse are purchased on 1st January 2004 and amounting 7 million and paid 3 installments. The useful life is 10 years and it used deferred payment method for the initial measurement. On 1st January 2024, the company also ran out 15% of their capacity to other entity for the purpose of generating others income. The rental income was 3 million per annum and its subsequent will use revaluation model. For a revaluation model, on 1st January 2029, we have fair value loss amounting 2,750,000, and our fair value on 31st January 2030 is 30,740,000. For journal entry, we have ARR fair value gain, which is amounting 6,640,000, and we also have fair value loss amounting 2,750,000. And then we also record bank 3 million and Sopol 3 million on credit as our rental income per annum. That's all. For next calculation, we will know about building transfer IP to PPE. On 1st January 2024, we have to record cost accumulated depreciation so that we can get carrying value. For the cost amounting 17 million and accumulated depreciation amounting 800,500. We can find the accumulated depreciation by we have to have cost 70 million and divided by useful life, which is 10 years, and times 5 years, because that we have used the asset for 5 years. And then for PPE, on 1st January 2026, which is deemed cost, is our carrying value 16,150,000. We have to divide with depreciation 16,150,000 divided by 5, and then we can get 3,230,000 for its carrying value amounting 12,920,000. For property, plant and equipment, on 2025, we don't have any ARR, and for 2027, our ARR on credit, which is 3,500,000, and also same with 2039, our ARR on credit amounting 2,100,000. For 2031, our ARR is on debit amounting 2,100,000, but for 2033, our ARR is on credit 475,000. That's all. The next one is journal for car rental transfer IP to PPE. We have 3 items, which is accumulated depreciation, property, plant equipment, and investment property. We have 2 items, which is accumulated depreciation amounting 150,000. Also, property, plant and equipment 150,000. And then we have to credit investment property, which is amount 300,000. That's all.
Next, we move to journal for primary machinery. For 1st January 2027, we has the new component for machine, which debit is 300,000 ringgit and the credit is cash. And next, we move to the accumulated depreciation for all component, which the cost for all component is 150,000 ringgit on credit, and the debit is accumulated depreciation for all component 45,000 ringgit and Sopol 105,000 ringgit. Next, we move to the journal for warehouse that use revaluation model. As you can see, it has a asset revaluation reserve, fair value gain, and it has fair value loss, and also rental income, which is the rental income is 3 million per annum. That's all from me. Thank you. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Nabi Zulkifli and my ID number is MDA2207086. I will tell about company 2, which is the title is Rebu and Berhad, which is a clothing company was established in Malacca in 2023, importing clothes from Australia, Japan and South Korea to sell in Malaysia. The company has been in the industry since 2024. It is distinguished between a clothing brand focused on a specific style and a clothing company involved in manufacturing and distribution. Fashion trends are evolving rapidly. For the PPE, according to MFRS 116, have three, which is plant and machinery, warehouse, and buildings. For the investment property IP, according to MFRS 140, which is two, have office building rental and warehouse rental. Reboot MV has three initial measurement for PPE, which is plant and machinery, buildings, and warehouse. This three item was purchased on 1 January 2024. The plant and machinery was amounting to 500,000. The useful life is 10 years, and it is used cash method for the initial measurement. For the building is amounting 70 million and pay it for installment. This full life is 10 years, and it use deferred payment method for the initial measurement. And for the warehouse is amounting 11 million, and its full life is 40 years, and it use self-construct method for the initial measurement. For the initial and subsequent measurement for IP have two, which is office building and warehouse. The item is purchased on 1 January 2014. For office building amount is 70 million, and useful life is 10 years, and it use subsequent measurement based on the cost model. The rental income is 200,000. However, in 1 January 2029, the office building was used for the administration. The company used a cost model to account for its investment property and revaluation model for its PPE. For a while, warehouse is amounting 17 million and paid in 3 installments. The useful life is 10 years, and it used a deferred payment method for the initial measurement. However, on 1 January 2024, the company also rent out 10% of their capacity to other entities for the purpose of generating other income. The rental income was 5 million per annum, and the subsequent will use revaluation model. This is the calculation for initial cost and measurement for PPE, which is plant and machinery, buildings, and warehouse. And this is the calculation for the initial cost and measurement for IP, which is using fair value method and cost model. Next, we move to the recognition criteria for PPE. First of all, the recognition criteria for PPE is the entity should expect has future economic benefit, and the cost of according to PPE must be reliably measured to ensure the transparency in financial statement. And this criteria apply to initial purchase and subsequent expenditure for maintenance of improvement. And now, this is for the recognition criteria for IP. Property like land or buildings can be classified as investment property under MFRS 140 if held for rental income or capital appreciation. Specific criteria apply for leases under operating lease. Initial recognition can be at cost or fair value, with subsequent measurement using the fair value or cost model. Companies can switch between this model, potentially leading to assets being recognized as investment property. That's all. Thank you.
Hi, Assalamualaikum. My name is Razik. So now is my turn to present about my part. Subsequent measurement for property, plant and equipment. First one, we have plant and machinery purchased on 1st January 2024, amounting to 200,000 and has a useful life for 10 years, and use cash method for initial measurement amounted to 502,000. Second one, warehouse purchased on 1st January 2024, amounting to 7 million and paid in 3 installments. The useful life is 10 years and use deferred payment method for initial measurement amounting to 12,250,000. Okay, next we have subsequent measurement for IP, investment property, and we have plant machinery. The explanation is actually same as a PPE because it is transfer from IP to PPE. Okay, this is a warehouse journal for Rebel MV Berhad. So as you can see, on 2025, we get revaluation deficit. On 2027, we get revaluation surplus. On 2029, we get revaluation surplus. On 2031, we get revaluation deficit. And lastly, for 2033, we get revaluation surplus. So this is a plan and machinery journal for Rebel MV Berhad. So on 1st January 2027, we buy a new component machine and we debit it for 400,000, and for the credit side, we write bank or cash. And next, accumulated depreciation for all component on debit side for 100,000 and 150,000 for Sopol on debit side, and on credit side 2,050,000 is all component for machine that we have been sold. Okay, we move to investment property journal for Rebel and Viberhat. First, we have plant and machinery, transfer IP to PPE. First, on the debit side, we have accumulated depreciation and property, plant, equipment. And on a credit side, we have investment property. Okay, we move to the second, warehouse revaluation model. On a debit side, we have accumulated depreciation and PPE. Accumulated depreciation 306,250 and PPE 4,950,000. And at the credit side, we have ARR 5,256,000 and 250,000. And second, we have IP for 7,200,000 and PPE on the credit side for 7,200,000. Third, we have ARR fair value loss for 1,450,000 and IP on the credit side for 1,450,000. And lastly, we have a bank for rental income and the value is 2 million, and on the credit side is Sopol on 2 million too.